Various use cases for options, hedging, speculation, and income generation. There are many different reasons why a trader may be interested in trading options, as they can be used for many different trading purposes. In general, as simpler trading, we primarily use options simply as a speculation or income generation vehicle. We do hedge from time to time if the market condition presents itself. Let's talk about speculation. What is speculation? Speculation is to anticipate price movements to profit from the change in an options premium. Traders buy options without owning the underlying asset, aiming for pure profit from price fluctuations. Now, what does that look like on a chart? For example, I had this set up in Adobe. This was a Squeeze Pro setup where, well, the VZO wasn't shifting quite yet, but I was speculating that it would due to the fact that we were in a nice trend. We pulled back to the 50 simple, and I was speculating and trading, making a bet that Adobe was going to trade up into $550 a share. Now, since I took that screenshot, it is actually traded up at 545 just today. But the point of the matter is that this is what it looks like when you're speculating in the options market. Okay, you're looking at an underlying security, you're using your technical and fundamental analysis, and you're making a speculation that price is going to go from point A to point B. And if it does that, how are you going to trade it so that you can make money? The next method of using options is going to be for hedging. Now, this is a pretty popular method, and as I mentioned, we will hedge from time to time. But, you know, it's not something that we do all the time. And the reason for this is because if you are perfectly hedged all the time, which means that you have a long portfolio and you want to protect against the downside. So you take an action to do that, such as buying puts in the NASDAQ. Here's the thing is if you're always hedged, you're either going to be making money on the upside and losing money on your hedge, or losing money on the upside and making money on your hedge. And so, it can kind of cancel itself out, especially if you are always hedged, because if you're always hedged when the market is continually moving higher, and then suddenly, let's say you lost money on your hedges all throughout here, like all the way from April to October, November. And then finally you make money one time when you're hedged, doesn't really make up for all the other times you were losing money on your hedge, right? So that's why we don't stay hedged on a regular basis in general, but we will hedge when we see the market starting to shift. For example, on this price pattern, you can see a pretty clean shift here, which is where we went from a very nice uptrend, very neatly stacked moving averages, to a cross and a shift from green to yellow to red, and price movement down below these moving averages. This would have been a great time to throw on a hedge because we had an actual trend shift. And so, if you have long positions, you can say, hey, I want to protect myself against potential downside. How can I use the options market to hedge because I see that the indexes are shifting lower? Now, the other method that we will use options for is we will use it for income generation. This phrase is specifically referred to most of the time, I would say, as it relates to selling premium. So, when you're talking about selling premium as an income generation method in the options market, typically what that looks like is, let's say, for example, you have a nice trending index and you're not really trying to make a big speculation on which price target it's going to go to or have any kind of major directional trade, but instead you are selling put credit spreads, selling put credit spreads, selling put credit spreads along the way up in a trend. Now, that is one way to use the income generation title here. Some option traders also may just refer to their overall account goals and their overall account growth. Some traders are attempting to trade for a regular income. So, therefore, any kinds of trades they do, whether they be directional, aggressive, or just selling premium, they may refer to it in that way. So, it is important to ask because there's a difference depending on who you're talking to. In conclusion, speculation, hedging, and income generation are the three primary methods in which we utilize options at Simpler Trading. During the next section, we will discuss the tools of the trade that we use to trade options. I'm looking forward to seeing you in the next episode.